How are you doing? This is David W. Williams, also known as Diamond Dave. Getting ready to get into market Mondays for 8/2/2021. To give you a quick heads up, if it's the first time you're here, want to ask you to like, subscribe, share it out. The reason why we do Market Mondays is because we want to give a really quick and concise market analysis, try to get you to understand the power of the markets to you, and also try to, put the markets in a very, very common tongue and not make you think that you have to have a PhD, you got to have a degree in finance, you got to be one of those people on CNN with a suit to actually talk about the markets. Give some real quick house cleaning heads up. So what we're going to do is a show this time may be a little bit different. It may be a little bit shorter than what it normally is. And what we're kind of doing is we are experimenting with different type of formats. I come from a production background. One thing I learned is that you don't try to force a production or a broadcast on an audience. There's a story that I remember, and we're not going to sidetrack it, but I want you to understand something is that Tyler Perry wrote plays and wrote, I wouldn't say broadcast, but he wrote performance plays for like around 10 years. And it took him about 10 years to figure out what people really wanted. And so a lot of people got to understand is that stuff that he puts out is what people actually wanted. And he was willing to produce it, so he made a lot of money. So as a person that is creating content, you're always kind of challenged between what people actually respond to with dollars and what they say they want. And so that's why when people started complaining about Tyler Perry, I thought it was the most ridiculous thing in the world, because I said he wrote what people said they wanted and they didn't pay for it. When he wrote the stuff, right, that they would pay for, then people complained about it, right? So, the reason why he's so successful is because he gave people exactly what they were responding to, as opposed to what inside their head they want to try to believe that they really want from a content standpoint. So that's something we're looking at because I don't believe in forcing content on people. And so if we can't get the level of engagement and response on this particular broadcast or this particular program that we're producing, we'll probably try to figure out whether we need to go in another direction and produce something that we think people may respond to a little bit more favorably. Because we just, just like from a television standpoint or a radio standpoint, you may not have the numbers to justify the work that it takes in to produce a particular content. So we're going to continue to look into that and maybe modify some more things. So for everybody that's been supporting this particular show, we really appreciate it. But like with any kind of broadcast, we have to try to determine the work it takes to produce the particular broadcast or to produce the actual content piece. Is it worth what we're getting back from a response standpoint to kind of determine what direction we need to go in? So let's go ahead and get into it. So today the Dow was down around 0.3%, S&P down around 0.2%, NASDAQ up around 0.06%. What we saw was the market started off kind of green, and then they kind of started going red towards like midday. People believe that the fact that people are still apprehensive about the Delta variant, and also the 10-year Treasury started to kind of, the yield started to move down during the course of the day. Now, I thought that before, if the yield moved down, it meant that everybody's supposed to run over the growth, which is maybe why the NASDAQ went up. So we got to kind of try to figure out what direction do we think the market is going in. We're still early in August. We're just in the second day. Last year, this time, as an options trader, I had the best month, single month I had last year was the best month I had over all 2020. I mean, pretty much everything I touched as a trade in August of last year, it pretty much went really well for me. So we want to kind of figure out how that's going to perform this way. Is it going to be, a repeat of that? Is the market going to be very, very bullish this August? Or are we going to get, a neutral market or maybe a sell-off? Have not looked at the S&P 10-year because we don't normally do that to the weekend. But we want to kind of try to figure out what direction do we think the market is going. I don't think this Delta variant is going to be a thing, but it could be. You never know. Now let's look at the jump out. So we saw Square. Square's getting ready to go into earnings. So they're having what you normally would see with a lot of companies. They're having that big run up towards earnings. So they was up today around 10%. Kind of started to top down around 280, hit a little bit of resistance. We want to kind of try to figure out where we think they're going the rest of the week. Look at Affirm, right? Affirm was up around 14%. A lot of people bought into this because they feel like they're going to be an acquisition target, right? That's not investment advice. It's just kind of like a rumor. So a lot of people want to try to get into Affirm because, the past two acquisitions, they got acquired. Stock price really ran up. So a lot of people look like they're trying to position themselves. Then we look at Bumble. So Bumble had not a massive sell-off, but this is not a really heavily traded stock. So that, 1.3%, 1.4% is a decent amount of downside to this particular ticker because it's not something that's heavily traded like a Square, right? So the people that are kind of hip to what's going on with Bumble, they kind of see what they kind of understand from a contextual standpoint what the big picture is about this particular company. So now we're going to go to the actual topic of the day. So we're going to talk about streaming theater. So the question you want to ask yourself, we're going into an era of a lot of direct to consumer streaming. If the streaming numbers come back, how are theaters going to justify their existence, right? So you want to kind of try to figure out, looking at Cinemark, looking at AMC. I don't know if there's another streamer. I don't know if IMAX is publicly owned. I thought AMC would have bought that by now or purchased it. If Disney and these other platforms are putting out really good numbers when they release it to the theater, but they also release it to the streaming platform, and the streaming numbers are really better than the theater numbers, and how do the theaters justify their existence, and how do they convince distributors to bring the movie to them? Now, there's certain movies I think need to be seen on the big screen, like the Dune that's getting ready to come out in the fall. I think Dune should be seen on the big screen. So there's always going to be certain movies that I think should be seen on big screen, but that may be how they have to be niched. So kind of looking at AMC, they're going now to doing some live events, some live sports. They may also mix certain movie projects in. So the theater business of the future may be, we do live sports, and then we also do, individualized movies that are made for the big screen specifically. But we just don't run every movie through it like we've done historically, and that may be their new model. So this is something that you just really want to try to consider as a trader and also an investor. What is going to be the landscape now for motion pictures? Whether it's going to be they're just going to hit all the streaming platforms and they're essentially going to move the theaters out of the way, or there's going to be some type of mix based on the theaters having to coming up with a new model to try to figure out who to bring in, or bring in a new customer category that maybe just doesn't want to watch movies, but they also may want to get involved in live sports, right? So that's going to be the Market Mondays for today. We talked about before, so the show's a lot shorter than normal. We experimented with new formats, and we're going to try to figure out, whether or not we get better engagement or more engagement or a different type of engagement on this new type of format. And they kind of try to figure out what direction that we want to go in, whether we want to continue with this particular broadcast, or do we want to take this particular slot on Monday and maybe move it in another direction, or maybe do we want to kill it and just do something different? So if you got questions about anything we talked about, hit me up in the comments. This is David W. Williams, also known as Diamond Dave. Hit me up about the options classes. The website is coming. We still working on some of the kinks, but we still have the links to the old website. You can still utilize everything do there. And like I tell you, lock into the classes. If you're thinking about the classes now, this is going to be the lowest price they're going to be all year. The price will continue to go up because people that are taking the classes and applying what we're talking about are actually getting results, right? And the results that they're getting are greater than what they paid to get into the class. So if you have any questions, reach out to me. This is David W. Williams, also known as Diamond Dave. I'll talk to you later.